Hey everyone, welcome back to my channel. In today's video, we're going to be talking about what I would do personally if I had $1,000 to invest in 2023. I'll then be talking about what I'm currently invested in, things I used to be invested in, things I look to invest into the future, some of the mistakes I've made, and by the end of this video, I'll do a full walkthrough of how to open up a retirement account or just a normal personal trading account so you can buy and sell stocks on your own. Let's get into the video. Okay, so first things first. I'm not a financial advisor, but I have been in the stock market for about 7 years now. I've been an engineer for about 3 years, so that's currently my profession. And I've had a lot of exposure to the stock market from 401ks, Roth IRAs, and a lot of just honestly just trading on my own and looking at the markets every day. So honestly, if you have $1,000, you don't have that much capital to be buying a lot of stocks that's going to get you a tremendous increase in your portfolio. However, I think that with $1,000, that's a really good starting point to open up an account for long-term wealth building. So something like a traditional IRA or a Roth IRA would be best. You guys should definitely look into the difference between the two of those, but normally a Roth IRA would be better. You contribute after-tax dollars to it, and the general consensus is that in the future you expect to be earning a lot more money than right now. I have a Roth IRA. I also have a Roth 401k, which has an employer match, so that's another topic on its own. But let's say you have $1,000, okay? You can do two things if you want to get into the stock market. You can go and try and trade it with penny stocks, since you could buy 1,000 shares of a $1 stock for $1,000 and hope it goes up 10%, or you take the $1,000 and you buy something like SPY, which is $390 or something like that, and you might not make a lot of returns on your money. However, I think that with $1,000, what you should be focused on is trying to just build that discipline for longer term investing. Because let's say you try and do, the whole penny stock thing and go for a quick buck or a large percentage gain. In stocks like that, there's a really high chance that they'll get delisted, in which case they'll be sent to the OTC market or something like that, and you might lose all your money. So I would say that if you're just starting out with investing, right, you really want to think about the long term and believe in yourself that you're going to be earning more money, as the years get on, and then you'll at least now have a foundation to invest into, right? So if you open up an account, right, with $1,000 and you start buying some, cheaper ETFs or index funds, which is what I would recommend, since with the index fund or ETF, they're usually a diversified fund. Okay, so you might have like 10 or 20 companies that are now leveraged into one stock, as opposed to buying one stock which represents one company. For example, you buy a stock in Tesla. If Tesla goes down, your entire portfolio goes down. If you buy an index fund like the S&P 500, right, SPY, you would essentially take all 500 of those companies to tank for the entire ETF to, essentially go to zero or something. So diversification is definitely a good way to reduce your risk in the markets. Okay, so you have your $1,000 and you decide to invest it into an account. What should you do next? So what I would recommend is that you break the $1,000 into $200 increments, and what you do is every month you wire in $200 into your account. What this is going to do is it's going to help you build up some discipline. So after 5 months, you would have used up your $1,000 reserve, and hopefully by then you can now get into the habit of contributing $200 from either a paycheck or any money you have left over, and that's how you're going to really get into the habit of investing over the long term. Now let's get into what I'm currently invested in. So the three main index funds that I currently have in my own portfolio are QQQ, which tracks the largest non-financial companies. Majority of them are technology stocks like Microsoft, Apple, Google. I then have SPY, which tracks the S&P 500, which is the 500 largest publicly traded companies in the United States. And lastly, I have the DIA, which basically tracks the Dow Jones Industrial Average. So I'll leave it up to you guys to go and read up on all these different index funds and pick what's right for you. Now let's get into some of the mistakes that I made when I first started off investing. So one of the main mistakes that I made when I first started off investing was not diversifying enough. So, putting a lot of money into some SPAC or a new IPO or the latest hot company is honestly one of the worst mistakes you could make. I was in really bad investments with Wish, Palantir, CCIV, and a lot of these companies that come out and they have great press releases, great news. There's a lot of hype over them, but essentially, until a company is profitable and really proves itself, putting all your money into one company behind one stock is really just not the safest thing you can do, especially in today's market where you might have a technology company that's profitable one year and gets completely wiped out the next year because a competitive company comes up and just takes over the field. So that's what I would recommend, and that's why starting off with index funds, ETFs, definitely minimizes the downside risk. Not saying that there's never any risk, because with the stock market anything can happen. You have to be able to accept that you're going to go through times when stocks go up, stocks go down, your portfolio will be red, it'll be green. So you have to be able to keep those emotions to the side. So you might be wondering, why did I make this video right now? What's the significance of it? And if you guys are watching this in 2022, you know that we might be heading into a recession. It's currently in a bear market, and usually during a time like this, a lot of people are really scared of their money. They're scared to put the money into the stock market, into any investments, because all you see is red. Okay, all you see is this downtrend. It looks like it's going to zero. Everyone's going to lose everything. And although it is possible that a lot of these companies and stocks might never recover, it's also the best time to be investing safely into diversified stocks, because essentially when you start investing at higher prices, that's how you have extra risk exposure compared to if you try and buy something at lower prices. So right now I really think is the best time to get involved. A lot of people make a lot of money during the worst of times, during the recessions, during bear markets, because there's a lot of upside. If you wait for things to make new highs and then only decide to start investing, essentially you're buying at the top, and it's just not the best thing you should be doing right now. So if I had $1,000 in the stock market, this is what I would do. This is where I would start. And yeah, so let's get into how exactly you can open up a retirement account, a Roth IRA, or just honestly, just any trading account, so you can buy and sell stocks on your own. Let's go. For this tutorial, I'm going to do TD Ameritrade Broker. There are a ton of brokers out there, but this is one that I recommend starting out with. It's very easy and simple. So yeah, you're going to go to the TD Ameritrade website. Over here, you can see all the different accounts: individual account for just normal investing, traditional IRA, Roth IRA. I would definitely read up on them. But yeah, so for a Roth IRA, you're going to go to this site, fill in all your information. I do believe you will need a social security number. There might be an age limit, so if you're underage, definitely get a parent to fill out all this information for you. You might be able to go under their account. Next, we'll look at the Roth IRA contribution limits. So there's a lot of different details on this, but for the most part, $6,000 per year is the maximum amount you're allowed to contribute to a Roth IRA. Once you get approved and the account is open, you can go over here to the TD Ameritrade website and download the actual trading software. It's called Thinkorswim. So you'll download it for Mac or PC or Windows. So once you're open with the application, this is kind of what the trading software looks like. On the top where it says account, you can basically switch between Roth IRA or individual trading account. And it has a ton of different features. Shows your account balance over there. You can create a watch list. And on the right hand side, that is the active trader ladder where you can actually place your buy and sell orders. I'll make a more detailed video in the future, but for the course of this video, this is all you need. That is it for today's video. Thank you all for watching. If you enjoyed this video or found it useful, please give the video a like and subscribe to the channel. I'll see you guys in the next one.